Welcome to this week's market review by Team Alphaniti. This has probably been one of the best trending weeks of 2021, with large moves in stock-specific counters, even as the main benchmark Nifty has rallied by yet another 400 plus points to cross another important barrier of Mount 18K. Major Tata Group stocks were the flavor of the week, with large moves recorded by key stocks such as Tata Motors, Tata Power, Titan, Indian Hotels and Tata Chemicals. At the risk of sounding repetitive, we believe that markets remain overextended and overbought, and we would continue to advise investors to exercise extreme caution at current levels and refrain from making any large fresh investments in the markets. Our crystal ball levels of 18,100 to 18,400 on the Nifty have finally arrived. Even if we give a leeway of plus minus 2 percentage points here or there are extremely high odds of markets and most stocks taking a breather after extremely large trending moves witnessed since we broke out of a tight range in early August this year. On the policy front, the Modi government has launched the all-ambitious Rs 100 lakh crore Gati Shakti Master Plan, which aims to adopt a laser-like focus towards implementing and completing multimodal connectivity to more than 1,200 industrial sectors, including 2 defense corridors. This master plan is the key to laying the foundation of India's economic growth for the next 25 years. From a long-term perspective, investors would do well to identify interesting opportunities from within the infrastructure, engineering and capital goods space and get invested here for the medium to long term. Post RBI policy and continued global inflationary pressures witnessed in base metals and various thermal and oil and gas products has resulted in the 10-year GSEC yields hardening to their highest levels witnessed so far this year at 6.35%. Not only this, but even the USD INR has faced pressure, depreciating by slightly more than 3% in the last 3 weeks. However, it is important to note that despite the fall in INR, it continues to be one of the best performing emerging market currencies this year. As was indicated in the previous week's update, the auto space was the clear winner hands down this week, with beautiful moves being seen in several frontline auto stocks. We would now recommend investors to take some profits off the table and go light on this sector in the short to medium term. Post the Air India divestment, the entire PSU basket looks extremely interesting and ripe for re-rating. We would recommend investors to build investments in this sector from a medium to long-term perspective. While the pharma sector has been a laggard so far, we continue to believe that some of the large heavyweights in the space look primed for a sharp up move, which would perhaps be triggered by earnings surprises in the coming weeks. While the CNX IT index has shown a strong bounce, despite a miss on earnings by TCS, which was followed by large earning beats by Infosys, Wipro and Mindtree, we continue to believe that the best performance of the sector is largely behind us and investors would do well to book profits here on any rise. We hope to bring you more interesting market level statistics in the weeks ahead. Stay tuned.